Good afternoon. This is Chris Brecher with the Simpler Stocks free video for August 3rd, 2016. So you can see it's about 12 minutes before the bell. Today was all about some differing things going on here. What I mean by that is if you go into the futures here, right now they're down 12.75. They were down over 20. Then came out that the Merck and Allergan might be interested in Biogen. Turned around the IBB and just is slowly gone up. Not a lot, but a little in here. Look what the IBB did when that came out. You'll see on how that improves sentiment right here. So the IBB went up, ES is stabilized. Simple as that. Now, right now you have the NASDAQ down 29, only 29, was down almost 50. Russell near its low for the day. Very unusual because you would think if Biogen and the drug companies kick in with some takeover activity, a lot of the Russell 2000 stocks are biotech stocks. You'd think this would be outperforming, and it's not. Bonds down 113. A lot of this, to me, is being spooked by a sharp rise in yields in Japan, which I'll show you in a minute of how to determine that. Gold going up 1280. And like I said in here, I had mentioned this on the free video yesterday and also in the live chat in Simpler Stocks in the morning, is we're going to start seeing a big detachment between the bonds and the gold. They've been correlating very well, but if I'm right that there's some funky stuff going on worldwide monetary-wise that leads to some instability, we're going to get bonds to sell off and gold to soar. We have crude oil finally comfortably under 40, like I said in there. When it got under 45, I thought it would go sharply lower, which I showed yesterday in the free video that I had posted that on July 19th. Advanced declines very poor today, and amazing that the SPX is only down 13. Nikkei down 370 after some stimulus there was not taken well. This is the big kahuna right here. That transport's down 162. Now, what happens with that is the transports are getting down to a level they were a couple of months ago. And if you believe at all in Dow theory, it's going to be a big deal in there in the next week or two. So how am I playing all this? First thing I want you to realize is why the market went down in the first place. Number one, Zika. All the fears about Zika in here. Now, I'm going to try to use my pen tablet and see if I can actually be able to draw correctly for once in here. But the whole idea in there is the CDC today basically said, there we go, and I got it to work. CDC said in Miami that they were one of these hot neighborhoods in here in Miami. Basically, they're warning people to avoid it. Now, if this Zika thing starts getting bad, the way I had looked at it, the Rio Olympics, a lot of golfers, male golfers, boycotted it because they said they were afraid of the Zika virus. There have been 10 cases in this one Miami neighborhood in the last month. Really big deal in there. So what that did is people are implying that that could be then extrapolated to a lot of other things. So because of that, you had UAL get smashed today, down over 6%. American Airlines, which has a lot of flights out of Miami, down 5%. Also in here, what else goes down when you get that sort of thing? You get the price lines going down. The travel sites, you get TripAdvisor, down 1.32%. It was much lower. Expedia was down $4. It's now down $3.62. All of these going down. What's the next thing you think could happen in there? If you're thinking of moving to South Florida, you might think twice. What's a big builder in South Florida? Lennar. Check out what this stock has done in 1 week. Now, the earnings were back here in June. Look at this, 49 to 45, a 10% move down. Now, you could say this because bond yields backed up a bit. The bond yields haven't backed up that much to cause a 10% sell-off. It could be this Zika thing, believe it or not, in here. So, I mean, I've seen stranger things happen in here, but it makes sense to me. Now, another thing I'm watching here, like I said, was the bond rates. You have bonds in this area, and I always show index charts first every night because I always think you need an overall perspective of the markets before you even think of trading individual stocks in here. As you see, the bonds in here are right in this area where they're getting overbought on MACD. They need to hold here. If they don't hold here, they could have another leg down. And as you see from this candle here, there's very little support till there. That could be a big deal. Now you might say, but the market's down. Why are the bonds down? This is one of the most confusing anomalies to me in all of trading. Bonds and stocks overall go together. They don't have this inverse correlation. Go into a weekly of the SPX. Now I'm going to take off the indexes on the left and go up to a weekly of the bonds on the right, if I can get it to work. And you'll see the whole theme of this market in this year is there's nowhere else to put your money because yields are so low. Well, if yields are so low, that means bonds had to go up and the market's up. They correlate great in here. So anybody that says, oh, the market's selling off, bonds have to rally, that's not necessarily true. Now, the whole idea in here is, why did the bonds sell off today and not even bounce? And the reason is the JGBD. The JGBs, which are the bonds in Japan, this is a 3 times ETF of the inverse ETF of the bonds in Japan. This is betting on rates going up. Now, the whole idea in this has been a widowmaker for years and years. Look at this move today. That is a huge deal. This is after stimulus measures and where the government says they're going to support bonds and all that. For this kind of move, which is about 2% today, but over 2 days has been almost 8%, it's a big deal. And you hardly ever see a spike up in yields in Japan, and that, I think, hit our bond market. I think that they're worried that their government has lost control of that market, and I think that's a big deal in there, and it's something you have to watch the next few days. Now, like I said, SPX, ESs came back like a champ in here, mainly because of the IBB. But when you have the transports doing this on a daily chart, and now they're starting to get under a lot of moving averages, if I can get it to work, the whole idea is if the SPX is this high and the Dow Jones Transports is this low. Now, I know Dow theory, you're going to snicker in there because a lot of weekly, when you look at a weekly chart, the transports are so underperforming the SPX that this can go on for a long time. But a lot of people thought, hey, transports are going to kick in here with a little inverse head and shoulders, which we call a Stewie pattern on simpler stocks. Whole idea is a lot of people thought that was the inverse head and shoulders that would break up. This failure right now in getting under these moving averages could become a big deal if you don't see a big rally soon. So I'm going to be watching that very carefully. Other thing, like we have a $7 trial for 30 days. It includes the chat room, includes the premium videos, which are more in depth than this, email alerts where I send out email alerts every night of indexes, stocks I'm watching, and unusual option activity. The unusual option activity is only about 4 a week. It's just the last 10 were 10 for 10. So I don't just spew out 100 of them where you don't know what to do. These will work great. The forum is more a message board type of communication between me and the rest of the subscribers. Meetup we have about every 10 days that we go over like bear flags, bull flags, wedges, how to use the MACD, and then they become in here like a book. You have all these videos that you can access for free once you're a member. So I hope you've enjoyed this. I will be talking to you tomorrow night. Have a great night.